Okay. It's a morning. Good morning, guys. So today's another day. Let's just go to the market. So I want to check the market on how it's going to behave here, because you can see I have a very good bearish bias today. The bias of today is good for the bearish price. Like, we have gone high and then take some buy side liquidity. Here, this buy side liquidity was taken, and then swing low. Even this one market came to take this swing low. That's a shift market structure, retracing it to the fair value gap. Now what I expect is market coming even just as far as to this side liquid that is here, but I just placed above this low. And remember, today we have news for it's around CPI, I think. Let me just check with you guys. This CPI news, let's just check on Thursday. This one, CPI. CPI, unemployment claim, fully fed manufacturing index, but that one's not so strong. So these two are around 8:30 Eastern time, and from the charts, bearish, the bus bearish, and then if we go to lower time frames, let's go to 3 minutes. A good end position was here, actually. This fair value gap, I measured it. This fair value gap, market came this shift market structure here, market coming here, going down. You can see how the candles were printing below the fair value gap, rallied down, came back to the discount part of it, left. You can see how the body behaved on the back to, because already you have dealt with discount. And if you are a bearish, we do expect the market to just deal with the discount, though it can go touch premium, but we love if the body just play within the discount part of the fair value gap, and then the market start rallying down. Was here watching it, so expected this one to be a breakaway gap, this one to be a breakaway gap, and then my end position was here with this candles coming here, just with this fair value gap. I think 3 minutes is the one that had a good end position. That fair value gap, that was my end position. When market came back to this fair value gap, I got into the market. So I would love this one to be a breakaway gap for me, and I'm watching how price is going to behave within this fair value gap. So just watching how the market is going to behave in this fair value gap. Even the reason why I'm placing my stop loss here is because if I check in the 15 time frame, I don't expect another candle to open in the next like 20 seconds, 15 time frame, and then come back until to the the high of this candle, of the first candle. This is the favor gap that's being formed at the moment. I know this favor gap. So I do expect the worst this market can do, the price can do, is just come maybe touch the high of this favor gap and then start going down again. So I'm going to watch how market's going to use this black candle and then continue going bearish. I love how the body behaved during that favor gap, so I'm watching how market's going to behave there again. What I would love this market to go up until here, just touch the low of this favor gap and then continue going down, or just continue going down. Anyway, you can see how GPS cable is behaving here. Nothing seriously since yesterday. It's just time distortion. We did the same range, like the market have just been doing this range since yesterday. So if this GPSD can use this favor gap to continue going down, and since you raise this more bearish, so just a minute. Yeah, as I was saying, this favor gap, if it can be used by GPSD to go down and come and attack this liquidity, that means when it comes to USD, will be more bearish and it will be able to attack this liquidity, this liquidity that is below here. And I would just love the how market is behaving this favor gap. That's what I'm watching at the moment. Remember, I've gone with 5 contracts here, so I can't allow market to retest until here. Maybe just want to see how it's going to behave this favor gap, and if it can be used to go down and attack this liquidity, this low I mean, and then continue going down. There's a small social liquidity that is here. Other one is here, so just want to watch how market is going to behave there. Let me check the XY. Yeah, that's a good one for me. This is a break, a low, high, low, low. So if the market can come and attack this bearish liquidity, that will be a plus for me.
till it's completely gone, it's the daddy.
I'm just watching how market is behaving here. This favorable gap. I would love this market, this candle to have closed if a black candle. Close below the discount part of that still okay. Closing below the Costco encroachment. I know this time distortion taking place, so that's why market still playing within this favorable gap. My expectation is to go take this swing low, this short-term low, even this short-term low, and then try to this liquidity that's here. That's what I'm expecting. I love how the conclusions have been used there. Just a minute, guys. Now, since you have closed below this fair gap, I won't love if it come back to the premium part, like we are done with it. And that's how I manage my PDRs. Like the moment market will come back to the premium part of it and close above, now I close the trade, because now the PDRA should respecting that. Now at the moment, what I expect, the worst thing is the market just come touch the discount part of it, and should not even close on that discount, because already you have closed below the favorable gap. Maybe touch and then resist that favorable gap and then continue going down. That's what I would love market to do. And then now, the moment the market to come this short swing low, should rapidly come and take this second one, and then continue going down. The message of the market is going to behave here. Don't have any issue as long as my PDR are still respected. Yeah, we have closed still below. That's okay. All this time distortion. Market price being within these two candles, the range of these two candles. That's all time distortion. This, you can see short-term high taken here, this low taken here, so the market should not again come to this high. That's why I've said in 3 minutes, the moment the market come and close above this rectangle, I'll be out of the market, like cancel my trade with that small loss, get away. So even if my stop loss is above here, I can't allow market to come back, take my stop loss. It's easy for me to recover my small capital that have got, like, let's say, like, how much until here, that's like 10, 20, like $10 to $15, other than expecting market, letting the market to retrace until take my for $2, you see. So it's easy to recover that small other than recovering 42. That's why I've said the moment market come above this premium part of this level gap, I'll just cancel my trade exactly at that point. But from what I see at the moment, I don't expect such thing to happen. You have still closed below the discount about this. I like the discount part of this level gap, closed below again, and I wish this swing low to be taken, small one, then rapidly go to this one. But let's see. I don't have any issue with that, as long as my PDR is still respected. This one, as I had says, I want it to remain open like that. That's the breakaway gap. Stay open. That's a good one. If it's close below the open of this candle, that's a plus for me. That means a bearish move. Like the market closing below this, the open of this 300 candle, that's a plus for me. I think you have taken this swing low. No, still you have taken at the moment. I think, yeah, sure. Now for the fact that you have taken this swing low, I want it to go and use this wick, rally to this short-term low, expecting to go to this one again, and then to the target. Yeah, you have closed below. Yeah, I have closed below this, the opening of this candle. Now I don't know the market to come back there again. Like, twende chini kabisa. And after market has taken swing low, and this short term low, I want rapid candlesticks, like big candlesticks. Nakwanga mchoyo kufika kwa trading. Nakwanga mchoyo, like I don't play with my stop loss because that's the capital that I have, that's the money that I have, and I have to manage it well. The reason why I placed my stop loss there is just after I will Moambia, like the reason why I placed that, we have played with this favorable gap, 3 minutes time frame. You can see how weeks went to do the damage above the favorable gap, but the body stayed within the discount. These two candles closing just close to the Costco encroachment. This one, like this one opened the Costco encroachment, rallied down closed below. This one closed below. This one closed below, even taking this swing low. So at the moment, I don't expect market to come back to the premium part of this favorable gap. Like this premium card, like tumemazana hiyo kazi ya premium part of it. Now what I'm expecting is the market continue going down. So the reason why I place my stop loss there is that I don't expect market coming back to that premium part of it. Even though I put my stop loss here for the fact that the market can come and touch the premium part and close above it, that means my PDR have been violated and I'm not in a trade anymore. And if you're watching, please consider subscribing. Don't just watch my video and then you can't support me by just only subscribing. Just subscribe, press that button, and you like. But in live trade, you can just see here. Yeah, now I'm watching how market is going to behave with this week. I don't want the quadrant levels to be respected at all. I want it like market to continue down. Market should go close below the encroachment, and that will be a plus for me. Yeah. If the market close below the encroachment, that will be a plus for me, showing that. Yeah, that one, like I think it may close below. No, we still have some time. This is a 3-minute candle. Yeah, so I don't expect in the next 2 minutes market closing below even this low. That will be a plus for me. That way, yeah, that's a good one. Taking this swing low, even closing below the swing low, that's like the best, what I expect, meaning that we are bearish. That PDR have been violated completely. And then taking this as a liquidity. That's a good candle, like iko sawa. It's a good move from here. As I had told you, we took this short-term high, swing low taken, entry position was here. You can see this favorable gap. Like, let me just come. This favorable gap, market coming into it. That's also a good end position. And from there you can see how market dumped down. In 3 minutes, I do think we have closed below. That's a good one for me. No, I expect that continue going down. Like, this market should be just dumping down at the moment. And just when it comes to 1 minute, my stop loss is within the order block that I had equal hapo. And even if I place my stop loss here, I don't expect market to come back there above that favorable gap. Even siwezi kubali kutoka hapa zero kwa hizi pesa zote ziko hivyo. So at the moment I expect this market continue dumping down. You have taken this total liquidity that I have saved, just like 100. Take this total liquidity, and for that we are going to take that one. I'm going to place my stop loss just here at the profit level to secure myself, because if you check in 3 minutes time frame, this is the favorable gap. The favorable gap is made of 3 candles, this one, this one, this one. So I'm placing above this one. That means I'm still in a positive way. Like, market should not come back there, and I don't expect market to come retrace above, like coming above or crossing above this second favorable gap. This is the worst favorable gap that I can give the market to close. But this second one above, I've cancelled my trade. That's the worst. I expect market to come retracing, and you can see how market behave on that favorable, on that short-term low. And I hope that's not a target. That's not the target that market came for. So I do expect this the other candle to come and continue going down. I don't expect to close above this favorable gap. The fact that it can come close above this favorable gap, I'll cancel my trade. Yeah, that's a good one. You have left this favorable gap. I don't expect market to come back again to this previous favorable. That's the same one that I've just used the previous favorable gap. Can just come and touch the low of it and then continue going down. You should be mean when it comes to the price action and how to use your PDRAs. Don't tolerate any nonsense when it comes to price, because market will never bend to your will. So at the moment, for the fact that you have left this